Hello, everybody. This is Noah and John, and we are from UrbanDigs. And Johnny, we're going to be talking Manhattan today. Okay. And we got Ben Dixon here of the Mackay-Dixon Team from Elliman. We're going right to the top right here just to get insights. I mean, is this market shifting? Is it shifting? Is it shifting hard? What's happening? Is sentiment changing? All these questions, Johnny, are going to answer.
Good stuff. Yeah. I mean, sorry, Ben. I just want to continue the introduction because I want people to know how special as a guest you are. You've got a background not only in real estate, but you also have a deep background in finance as well. So you're seeing multiple sides of the picture. So we're looking forward to your insights and opinions today.
I'm happy to be here.
Yeah. All right. Well, we're going to get right into it, Ben. First, what we like to do here is we like to start high level with the market, just to get all these different interviewees' perspective on the current market. So please tell me what's going on with the market today, and are you sensing anything changing?
Yes. So when we think about the market, we think about supply and demand. We go back to the old adage. And right now, the real feeling we have is on the supply side, we have enough homes to sell, but not too many. And we definitely have a lot of good buyer demand, but we certainly have to acknowledge that we are experiencing some headwinds at the moment. I'm sure you've been having people asking about inflation, asking about interest rates. There are a whole litany of things going on in the world right now that might make buyers feel uncertain. So are we transitioning? Yes. I think when we talked about a year ago, we were coming out of a clear buyer's market, kind of thought we were moving into a seller's market, which we did move into. Now the question is, are we coming back out of that again, and where might we land?
Yeah, that's interesting stuff. And if I could follow up on that, I think you mentioned that you on the demand side, let's focus there for a second, headwinds. And I'm curious, when you're working with buyers, and of course, every market is its own, every building is its own market, every neighborhood is its own submarket, but just generally buyers, what's the sentiment right now for buyers, and what is the sentiment like for sellers? I mean, are they seeing it, is it hot or not? How are they viewing this market?
Yeah, I would say, if we were having this discussion just 2 months ago, it was hot. Sellers were feeling very bullish. Buyers had a lot of fire under them. We had a lot of talk about rising interest rates, which had the effect of lighting a fire under those buyers. They wanted to feverishly get contracts signed, lock in those low rates for the next 7, 10, or 30 years. And inflation was being talked about, but I don't really think many buyers think about that so much. What they probably really think about is, interest rates going up and their monthly costs going up because of inflation going up. On the seller side, I would say that real bullish seller needs to be just a little more careful right now, and acknowledge these headwinds and not really be reaching for the stars on price. If something's priced right now, it should still be moving. It may not just move quite as fast as it was going to move back in March or early April.
Yeah, and I'm just curious, just for buyers, before I get into the next question, are buyers telling you right now, do you sense any difference in fear because of the rates specifically? Or is it a mixed bag amongst your clients? I'm just curious, is this something that you're hearing every buyer tell you?
Right.
Yeah, so the discussion is happening with almost every buyer. I definitely have buyers that are just, plowing right on through. Those buyers are probably aware that interest rates are going to continue to go up further. So while they may not have timed that interest rate market perfectly by locking something in a couple of months ago, they know that they're going to feel good about their current lock than if they wait another 3 to 6 months.
Yeah, and I ask because I'm wondering how inflation is going to ultimately affect home prices. And I mean, I know you think inflation, you think housing is a hedge, that's kind of how it works. But when you're in the game and you're playing it, there's kind of seasonality and there's little cycles. And let's just look at what we did. We Q1 seemed like the kind of peak in activity when we look back at it now. Right. So what do you see? Inflation, home prices, where we are in the cycle, et cetera?
Yeah, I think we definitely saw a ton of volume going through during Q1, right? That was partly the threat of rising interest rates, partly just the season. And now what I would say is we're seeing buyers take a collective deep breath and recalibrating. How much home can I afford now? How much home do I want to afford? Is my down payment as big as it used to be? When they think about inflation, though, and when agents and their buyers think about inflation, inflation means that housing prices are going to go up everyday needs are going to go up, interest rates are going to go up, whether it's real or nominal, depends on how much inflation. And we've really gotten into an area of not having to think about it for a long time. But inflation recently hit 7.9%. That's the highest it's been since 1982, when, if anybody remembers back that long, we had a lot of inflation. So we have to really just account for it, think it through. And I think that is why we're seeing this pause or deep breath in the market right now, is buyers are having to think through that. What I will say is think quickly, move quickly, because what happens when we wait during inflation is our stock portfolio or cash balances in our bank accounts are worth less. That's just by definition inflation, and the prices of homes are more. So that's a pretty simple equation to say, think about it, but don't think too long. You want to act quickly.
Yeah, and I just want to ask, I'm going to raise my hand, John. I know you have a question coming up next. When I look at the wealth situation, all right, I look at the last 2 years, the wealth creation and the wealth destruction. That wealth creation took a good, 18, 20 months, 22, whatever it was to go. That wealth destruction in the last 3, 4, 5 months, some stuff has gotten hit really, really hard. Are you experiencing with your buyers any change in sentiment due to the fact that their assets that they own may not be as large as it was 3, 4 months ago?
Yes, absolutely. And generally these corrections last a few weeks to a few months. So they happen pretty quickly. We all take that emotional hit and the financial hit of them pretty hard. But the thing to remember is they actually move pretty quickly, and then we usually move back towards wealth restoration. So I definitely have a few buyers right now who we were in the process and they said, I just need to pause a little bit and see that balance in my portfolio come back before I can take it out and put it into real estate. Now, whether that will be a long-term, the right decision, we'll have to see how far real estate moves during that time. But people that were relying on a significant portion of their portfolio to put down as a deposit, this has changed some decisions for them.
Well, let me follow up on that, because you touched on something which reminded me of something. So I'm going to go to that. And that's one of the things that we've been looking at as we've been tracking, is the difference between renovated versus unrenovated units and what that spread looks like. And it sort of hit a low. I mean, the record lows were back in the peak market 2015, 16, right? There's really not that much of a difference between a renovated unit or unrenovated in terms of median price. But fast forward now, they're at a record spread. And that spread blew out, even though the market was quote unquote hot 2021 into early 2022, that spread was just as wide as it's ever been. And I think a lot of it had to do with the fact that the idea of a renovation is now just a black box, and the risk premium that buyers are demanding has skyrocketed, which turns into sort of higher listing discounts. So I just wonder if you had a comment on just the renovation versus unrenovated sector in general.
Yeah, that spread widening right now doesn't surprise me at all. It's actually, I'm happy to hear that it's kind of underpinning what I've been selling to a lot of my clients. If they're looking for value and they have the stomach for a renovation, I'm in the middle of a big one right now, so I can tell you they can be done. You have to be flexible. You might need to change a tile here or there and switch things out, maybe some appliance changes. So you do need to be flexible to get through one. I also tell my clients at some point they will curse my name for letting them go through a renovation in New York City, but at the end they will forget the pain most likely, and they'll have exactly what they want. So I think when you look back to that 13, 15, there was just no inventory. People were just trying to get something, and they would deal with the renovation if they had to. We're not as crunched on the inventory right now. And I think the fear of that COVID renovation is actually worse than it is. If you were midway through when COVID hit, that was a nightmare, right? You couldn't even get the contractor into the apartment. Now we know there are supply chain issues. We know we need to be a little flexible. We might have a few delays that we don't expect, but that's doing a renovation in New York City. So that's one of my favorite value plays right now, if clients have the stomach for it, is to go find that apartment that needs a renovation.
Yeah, and that's exactly what we were thinking as well, as value plays. And you know what? Stale properties that are not selling right now, that are 90 days on the market, and now they're trying to reduce their price and figure out where the market is, and something that's not selling because of inflationary pressures, and that will ease down the road. I mean, it may take years, but I mean, with the Fed doing like a controlled demolition of inflation, we're in uncharted territory in this macro world situation right now. But I do want to go back to the value. You mentioned something about value. estate sales, places that need a big renovation are not getting a good bid. What other places are not getting a good bid right now and might be, I guess, called a contrarian value play for buyers or investors that are looking for some value?
So like, where are my favorite neighborhoods for value?
Sure, say anything. Sectors,
Okay.
neighborhoods.
All right. Right now, neighborhood wise, and I probably even said this before, but Hudson Square is a great neighborhood for value. We saw zoning changes there over the last couple of years, some new developments going in that are really nice quality. And not everybody will know the neighborhood name, but if you think about it, you're bordering the West Village, Soho, and Tribeca, three of the most popular neighborhoods in the city. And I really believe we'll start seeing that as kind of the Southwest Village, in the years to come. So I love Hudson Square. Nomad is probably a little further along than Hudson Square, but if you look at those adjacent neighborhoods that maybe didn't always have the flair associated with their name, like Murray Hill, Kips Bay, right around there, you used to travel pretty far to get to something fun or a nicer neighborhood. Now you're right there with Nomad. Plenty of bars, plenty of restaurants, lots of fun stuff going on. So I really like that. And then now more pandemic related would be Midtown East, with the flight out of the offices and workers being in the offices. We really saw a drag down on Midtown East. And now some of the forecasts are saying that, we're around 40%, we might be back to 70% by the fall. We will see more of a return to the office. So I think we'll see Midtown East come up there as well.
It's
interesting.
Yeah,
sorry, can I ask? I'm going to raise my hand. sorry, John. Ben, can I just ask you a question? Are you seeing more negotiability? Thank you for going over the neighborhoods, but I want to go with the price tiers for a second. Are you seeing more negotiability for buyers in certain price tiers than others right now in the last month or so?
I would say, it's the need versus want. So it could be something that's in that 5 to 10 million, but it's a big amount of space, 4 or 5 bedrooms, good size loft. That's a need for somebody. So you're not going to see a lot of negotiability there. But when you have that like $3 million 1 bedroom, 4 to 5 million 2 bedroom, that's often a bit more of a want kind of apartment. So we might see more negotiability there. So we're seeing strong movement across all price points, So I wouldn't put it in a specific price point, but I would put it in kind of where the dollar per square foot, maybe the higher the dollar per square foot, we're seeing a little more negotiability there. Interesting though, we've been on a tear since the last time we talked last May. We've been on a tear in the luxury market. We're averaging in the high 30s, 40 a week. We never would have believed that would have happened before. We were happy if we got 20. And last week was the first time we barely broke 20. So that'll be really a space to watch over the next few weeks.
Would you agree that the luxury sector probably peaked in Q1?
I don't want to predict that, but I wouldn't be surprised if that's the case.
Okay, thank you. I had to ask. Sorry.
Yeah.
I'm just going to go back to your Hudson Square comment. I think it's great. I'd actually like to see what the values are, asking prices, before and after Jacques Torres left, because that was sort of, why I was there in the first place. But if I could just kind of start to wrap this up, and we talk about the market in general is kind of going through the shift, right? We've been going gangbusters for so long, and now it looks like buyers are kind of taking their foot off the gas. It's normally the ending of the busy season. We're sort of heading into the summer season. So I'm wondering if we have, a couple phenomenons on top of each other, but I'm just curious, for the agents out there, what's your advice for how to navigate this market, not only on a professional level, but also, talking to your clients and sort of on that everyday personal level?
Yeah. I would say with agents, don't wait to talk to your clients. If it's going to be a difficult discussion, whether it's a price reduction or some other type of action that you need to take as a seller, you don't want to be having that discussion in mid-June or late June. You should be having that discussion right now while the buyers are still here before they leave for the summer. So it may not be fun. It might be an uncomfortable discussion, but you have to do it now. Any sellers, I know it's your home that you're selling, but if it's been on the market, like you guys said, for a little longer than it should have been, and your agent's doing everything they can to promote it, then a lot of times it is going to come down to price. There's only so much promotion and marketing we can do, only so much talking we can do to get something sold if the price isn't right. And for buyers, I would say you could be a little patient right now. Like, be in the market, know it's there. jump on what you want, but compared to a few months ago, you can be a little patient right now. You just got to watch those interest rates.
Yeah, I love it. And I love how you just come out there and say, listen, I agree. You know, and look, if you're a buyer and you have a timely need to buy, you're going to buy. If you're a buyer that wants to buy, but you find that great place and there's a good value, you're going to buy. But if you're a buyer that's been looking and waiting for an opportunity or a discount window or so leverage, it might be upcoming. And like, this is the first signs I'm seeing that might be upcoming. I would have all eyes on this market as we get into summer and into fall. So yeah.
And I think, Ben, you brought up one, and I just want to hammer this point home because it's so natural, I think, for a lot of new agents, especially, to not want to have that difficult discussion, to not talk about the fact that you might be overpriced, especially as the market is shifting. And I think you hit the nail on the head, which is, if you have a difficult discussion coming up regarding pricing or lack of people at an open house, whatever it might be, it's best to have that as soon as possible. Just get that out of the way and move to the market. It's that's a gold nugget.
And for agents right now, it's not like it's been a flat market for the last 90 days and they're pointing at you for mispricing something. I mean, a lot has changed. Equities markets have moved a lot.
Right.
Interest rates have moved a lot. More COVID surges, foreign unrest. Like there are real true headwinds that have changed in the last 90 days, which might be a real reason for a price adjustment.
Yeah, I agree. The macro forces have changed. We are a future discounting mechanism. And when you look at the future, the world has changed. Ben Dixon, this has been fantastic. Thank you so much for taking time out of your busy schedule to work with us today of the Mackay-Dixon team over at Elliman. Thank you so much. That is John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. This has been Talking Manhattan, and we'll catch you next time.
Thanks, guys.